Can I ask you then what the role is of monetary policy at this stage? Assume there is the worst case scenario around any of these threats, whether it's a no-deal Brexit, whether it is a worsening course because of the pandemic. Is there anything monetary policy can do at this stage, or is it purely down to fiscal stepping up at this point?
Well, I think it's a combination of both. Monetary policy has made a very big contribution to the economies of the Eurozone. We've seen that since our response, the ECB Governing Council's response in March to the immediate stages of the pandemic. The ongoing response, the extra response that decisions we made in June, I think it's making a significant impact, contribution to the economy. But fiscal policy is absolutely the main player in these particular circumstances and conditions. So we do need fiscal policy to step up. It has stepped up in every EU country. At the EU level itself, we had the welcome move to establish a recovery fund. The sooner that's implemented, the better.
Governor, I want to switch focus to the US election. There's an enormous amount of market risk around the 3rd of November, whether President Trump is re-elected to the White House, or whether we see a change and Joe Biden takes the Oval Office. Can you give us a sense of the ramifications here? Because there is a fight still playing out in the backdrop around digital taxes. It's part of the European budget for the next 7 years, and Ireland has been an economy that's very much benefited from having so many tech subsidiaries and a tech ecosystem. How worried are you about what happens in the next few weeks?
Well, the US electorate will decide who it wants its leader to be. I mean, from Ireland's perspective and from the EU's perspective, we see through the election. The United States is an incredibly important partner to Ireland, an incredibly important investor in Ireland. That has been the case in the past, and we're sure it's going to be the case in the future. Whether the markets are very excited or not excited around election time, as a policymaker and as a member of the ECB's Governing Council, certainly we're not going to be driven to any decision making as a result of whatever happens at the election. We will see through this. And I am sure that United States businesses will continue to be important investors in Ireland, and the United States will continue to be an important player in setting the world's economic rules, the world's economic standards, and being an important economic partner to the rest of the community.
So nothing knee-jerk here in the central bank reaction to the politics that Governor is coming through. No. And while we're talking about the long term, let me ask you about inflation, because a number of investors already are talking about inflation protection for the long term and repositioning around assets that may reflect that type of scenario. The message, though, from central banks is lower for longer when it comes to rates. Should we be prepared in the next couple of years, when we get out of this white heat moment on the pandemic, that inflation does return at some point?
Well, some inflation will return, and we are at the ECB, we're forecasting some inflation will return. If your question is, are we going to get very high inflation, I think that's unlikely, partly because we're determined to deliver on our mandate. But there are some interesting and important issues for us to be thinking about at the ECB, which is why we've launched a review of our monetary policy strategy, the first one in 17 years. And we'll be looking quite deeply at the lessons of the past, at what we see in our economies, and what that will mean for inflation in the future.
Where does it leave average inflation targeting? Do you think that's something you should adopt?
Well, I think it's one of the options that we should look at, but I think the nature of a review is that when you're in the early stages of it, you shouldn't rule anything out. The only thing we have ruled out is we're not going to actually study our actual mandate that's written in the treaties of the European Union. We'd take that as read. But otherwise, we should look at all options, the nature of the targeting, the way we measure inflation, the tools that we use, the interaction with fiscal policy. There's a lot to look at, and we should keep an open mind. That's probably the most important rule right now.